How's it going, everybody? Mike Weber here with your real estate market update for the beginning of March 2022. So let's get started, guys. First off, I want to thank all of you that have reached out to me over time or have sent me referrals or people that need help. And I just wanted to let you know that our mission on our team is to help as many people as we can have long-term housing security as well as build wealth through real estate. So we definitely appreciate any referrals or any of you that need help that you reach out to us so we can go ahead and talk with you about how we can do that. So let's go ahead and jump in. Let's talk about what's happening in the local real estate market right now. So we're kind of seeing similar things to what we were seeing a month ago. Now, for Los Angeles County as a whole, we're kind of seeing a flattening out of prices. Of course, interest rates have risen pretty dramatically. I mean, when you really consider, how much they've come up in just a couple short months, it depends on what type of rate you're talking about, but maybe 0.75%. They're hovering around maybe 4% or so right now. The Federal Reserve is still talking about maybe continuing to raise rates. So if that happens, obviously mortgage rates are going to continue to rise. And I think what we are seeing as a result of that is obviously kind of a stabilization in the housing market. Now, some of you are going to say, Mike, what are you talking about? The market is on fire. In our area, we're seeing stuff sell for $100,000 over asking with 20 offers. And that is true. Certain markets, your A-class sort of markets, Culver City, Redondo Beach, Manhattan Beach, whatever they are, there's still a lot of strong demand in those areas because we have very, very little inventory on the market, and people that want to buy those homes are willing to pay a premium. They have the cash to go ahead and do that. But a lot of other markets in LA aren't quite as hot. In a lot of markets, there's actually property that's sitting on the market that isn't selling or that is not getting the offers at the very high prices that maybe a seller decided to list it at that the market isn't willing to pay. So let's actually jump in. We'll look at the charts themselves and take a look at what's happening based on the data. So getting started, let's look at Los Angeles County as a whole. And when we look at median prices, what we see is that it's actually been pretty stable for almost a year now. We are up 11.3% compared to where we were at this time last year, but we've been going sideways for a very long time. We're not seeing that extreme growth that we were seeing over the last couple of years. And I think if rates continue on this trend, we're going to kind of see the same thing, especially if we don't start to see more inventory on the market. And so that's what we'll talk about next. Now, if we look at inventory, we see that we are still down to these extreme lows. We're down 36% compared to a year ago. And again, we're kind of in this environment where there's just nobody selling. There's no homes on the market. It's very difficult as a buyer out there to try to find a home and get an offer accepted. Of course, unless we're talking about some of those markets where maybe the homes are overpriced or maybe they're not as desirable, etc. Now, if we move into the South Bay beach cities, what we see there is really a similar trend, maybe kind of not as good as Los Angeles as a whole, in that median prices are only up 7.9% compared to where they were a year ago. And some of you remember we had seen this extreme numbers, 15%, 20% year over year growth for a while there. And since then, almost a year now, or 3/4 of a year, we've just been kind of gradually tapering down. And so it kind of makes sense because as interest rates are tapering up, you would expect to see home prices start tapering down. And is this going to continue? That's the big question. If rates keep going up, prices probably will continue on this path. Of course, unless a lot more sellers start to list their homes. If inventory really starts to pick up substantially, all of a sudden buyers have choices. They don't have to be as aggressive with the offers they're writing. They don't have to act as quickly. Obviously, the tables can turn pretty quickly. We got a lot of things going on in the world right now, and it's really just kind of uncertain what's going to happen. I don't think anybody really knows what the Federal Reserve is going to truly do or where rates are going to really go. So obviously, we'll be keeping a close eye on it. Now, if we look at the South Bay and we look at inventory there, we see the same thing as Los Angeles County. We are down 44% compared to a year ago. I mean, it's totally crazy to have inventory that low. In fact, we're down lower than one single month months supply, probably around 0.7 months or something along those lines. And I mean, that is just historically low inventory. So it's a very interesting market that we're in. Obviously, some markets are still hot, but there's not a lot of stuff out there. And I mean, it just seems like something is going to have to change. Like something is going to finally shift, and all of a sudden things are going to be different than they were before. But of course, right now, they're still pretty much the same. So I hope this information is useful. If I can help you or any family, friends with anything real estate related, definitely reach out to me. I'm here to help. And I'm curious what you guys think is going to happen with rates and the real estate market this year. I'm seeing a lot of naysayers out there, a lot of people saying the market's going to crash. I'm not seeing that. So tell me what you guys think down in the comments below. Appreciate you guys watching, and we'll see you on the next video. Take care.